All right. Today is, Wednesday, March 2nd. This is a recap for the stock market activities today. Folks, I got a good one for you tonight. And let's just say this. Yesterday, I predicted that we will have a ceasefire negotiation agreement, whatever it is. And this will shoot the market higher. What do you know? Today we got the news. There are negotiations right now as we speak, even though the scenes are ugly out there, but we have a ceasefire negotiation on the agenda in the talks that are about to happen. So cue the, what do you cue for this, for peace? I don't know, cue some weed or something, I don't know. But here's my theory about all of this. I think President Vladimir Putin is watching the show, and therefore today I decided to book a phone call with him, and this is how it went. Take a listen.
Hello?
Hello, Mr. President.
Who's this?
This is the Maverick of Wall Street.
Who?
You know the Maverick of Wall Street from YouTube?
Oh, yes. The very good videos. Very good. Очень хорошо.
And how are you?
Замечательно.
So listen, Vlad, I heard you took my advice from the last video and you'll take peace.
Yes, I take peace.
Oh, thank God, what a relief. So the war is over now, right?
No, I take peace of Ukraine.
Oh no. So we're back to square one now.
Just one square. No, I bomb all squares.
Oh, jeez. Okay, I guess we're not gonna go anywhere here, so, good talking to you, Vlad.
Where are you going?
Well, I got a show to do, so goodbye.
Okay, you go yourself.
So anyways, for now, as you can see, the headlines read, the Dow jumps on Russia-Ukraine optimism. Oil surges. What else happening in the market today? Nothing really happened because when we look at the indicators, on the bear camp, palladium was higher, oil was higher, wheat was significantly higher, the RSX was down big today. So all of these were indicators that the tape was supposed to be bad today. But we had two indicators on the bull side. Number one, the VIX was down. Number two, gold was also down. But perhaps most importantly today, and this seals the deal, by the way, a lot of you tell me, hey bro, you don't know what you're talking about. You keep saying the Fed is the most important thing. It's all about the coke. You don't know what you're talking about. Oh really? With all the chaos out there, somehow the market rallied higher. Why? Because the big dog, Jay Powell, was testifying today. And of course, what did he say? He threw cold water on the 50 basis points in March. Poof, gone. For good, it's never gonna happen. It wasn't gonna happen to begin with, whether we have Russia-Ukraine or not. And Powell now says it's 25 basis points. That's all there is. Now, in the past, I would go through the testimony and I would show you what Powell said, yada, yada, yada. Not anymore. I'm sick and tired of this guy. Matter of fact, I didn't even listen to his testimony today. I could care less. It was too early in the morning to start puking. And as you can see now, interest rate hike expectations went down dramatically last time around. And this is all what the market cares about for now. The problem is, we're just pushing the can down the road. Sooner or later, we're gonna have to revisit the issue. And when we do, and by the way, it's not we, it's the Fed. When they do, it's gonna be way too late. Why? Because when they realize that it's already too late, the economy will be in a massive, severe stagflation phenomenon. Now, notice, everybody in the media talking about stagflation. Your boy, the guy you're listening to right now, was calling stagflation a year ago. I was telling you exactly how the events will unfold. I told you, Jerome Powell will be wrong. There is no such thing as transitory inflation. And we will hit stagflation at some point. And here's the next prediction. After stagflation, we will hit recession. Why? Because the Fed will have to slam on the brakes in an aggressive fashion. And by the way, this is not just my assessment. Even Larry Summers came out today and said it is pretty much inevitable at this point. The next recession will likely be caused by the Fed. It's done. It's over. It's in the bag. Recession is going to happen 100%. And with that positive note out of the way, let's move on to cover the main topic of this video. And here it is, in focus tonight. How about the upcoming starvation crisis? Because food inflation will surge out of control. Why? You ever heard about a country called Belarus? Well, apparently it's a lovely country, but you probably don't want to visit right now because the majority of the invasion of Ukraine is taking place from Belarus territory, and therefore the US closed its embassy in Belarus. And we're seeing now crazy developments, by the way, as Belarus ditches its non-nuclear status. What does that mean? Perhaps Russian nukes will be transported and placed in Belarus territory. No biggie, right? Nuclear war. Matter of fact, it could be good for climate change. This is according to the Huffington Post. But anyways, today the Biden administration slapped more restrictions and more sanctions against the country of Belarus. So Maverick, why do we even care about Belarus? What is the big deal here? Here's the big deal. We have something we call food inflation. We actually have inflation all over the place, but food inflation is the most dangerous type of inflation because it might cause starvation, hunger. You gotta forego certain spending so you can eat and stay alive. The headline from CNN says, wheat futures are soaring. Food prices could be next. And they have a picture of a gas station. I guess that's wheat right there. These are the same geniuses at CNN who produced a headline that says McDonald's sales haven't been this good since Bill Clinton was president. And they have a picture of Taco Bell. Anyways, as you can see, the Bloomberg Agricultural Spot Index, which tracks crop prices, has reached all-time highs. So we already have a severe food inflation, a severe hunger crisis, not just in this country, but across the globe. And it's about to get a lot worse. Rising food prices are emerging as a significant headwind to the economic recovery from the thing this year. Soon enough, by the way, we don't have to say the thing because the censors, they don't care anymore. They got a new boogeyman. Anyways, particularly in developing countries where food accounts for an important share of household consumption. So why are we talking about Belarus again? Hold your horses. We have a war right now, I don't know if you heard or not, between Russia and Ukraine. When you combine both of these countries together, they account for almost a quarter of the entire global grains trade. So any supply restraints, any shortages of supplies of grains from these two countries will have a severe impact on food inflation and the hunger crisis across the globe. And we're already having ports in Ukraine because the majority of these ports, by the way, are in the southern side of Ukraine. All of these ports right now are closed for business. And the reason is we have massive conflict in that particular side of the country. And everything is rising higher. If you've been watching the futures, corn, wheat, soybeans, oils, sunflower oil, all surging out of whack, which will push food inflation higher and higher and higher. Russia alone is a major supplier for another important element in the food pyramid: fertilizers, the core and the source of farming. So from the get-go, we're getting a massive hit, taking the Russian supplies off the market. We have sanctions, we have a war, the ports are all clogged right now, so Russian fertilizers are not moving, and this is pushing the prices of fertilizer components, the likes of urea and potash, significantly higher. Now farmers have to buy fertilizers to raise all of these crops, meaning they will incur extra cost to produce food. What does that mean? All of that extra cost will be passed down to who? To you and I, baby, the consumer. We're gonna pay more and more and more. Okay, so what about Belarus, bro? What are you talking about, Belarus? Here comes Belarus. On the eve of the invasion, I tweeted this: Belarus, one of the largest fertilizers producers in the world, will likely get sanctioned tomorrow. This will add more fuel to the fire of food inflation. Very dangerous development. And indeed, the sanctions are here. And look at this. The largest producer of potash in the world is Canada, then Russia, then Belarus. So you take Russia and Belarus, who's going to compensate for all of that? Now we have fertilizers prices surging out of whack, pushing food prices as an end result also out of whack. Belaruskali said around February 16, this is a Belarus fertilizer producer, that it won't be able to meet contracts, according to a letter from an exporter addressed to clients seen by Bloomberg. Shipments have been halted as a result of US and European sanctions. The absence of Belarusian supplies will have big consequences. Potash is a key nutrient for major commodity crops like corn, soybeans, as well as produce. Fertilizer prices have already skyrocketed as soaring natural gas costs forced some European plants to halt or curtail production. And U.S. spot prices for potash in the Corn Belt have nearly doubled in the last year. Expensive fertilizers is making food more costly to produce and contributing to rising global inflation for consumers. Belarus exports about 10 to 12 million tons annually, according to Green Markets data. The country accounts for about a fifth of global supply. It is a major shipper to Brazil as well as India and China. Global potash contracts have settled at the highest price since 2008, ensuring another year of pricey inputs for farmers and strong earnings for producers, said Alex Maxwell, an analyst at Green Markets, a company out of who cares. U.S. sanctions on Belarus eliminated a key competitor with no readily available alternative supplier. Here we go. CRU's Knight said that Russian ports were likely the only option left for Belarusian potash to export, but most are already operating at capacity, while some Belarusian potash could be rerouted to the Russian market, pushing Russian companies to export more. The volumes would be small, he said. And now, this is by the way old news. Now, with the sanctions, there is no way you can export potash from Russian ports. Nutrien, pay attention now, because you're probably asking yourself right now, what do I care, bro? Just give me the ticker already. Tell me which stock's gonna move higher, and let's move on. Here's a stock for you. Nutrien has an additional 500,000 tons of capacity that would be available in the latter half of 2022 if needed. Grower margins are strong, so higher potash prices will not result in less demand. The company could also ramp up potash output, but first, it would need to see a prolonged impact on the market for years to bring on additional sustained capacity. Nutrien increased its potash capacity by 1 million tons in 2021, and additional volumes are expected to come online in 2022 from other companies. The potash situation in Belarus is bleak. Scotiabank analyst Ben Ackerson said in a note, Nutrien will benefit not only from the higher prices, but also from being able to leverage their volume of the crop Nutrien. Nutrien now, listen to this, Nutrien is now in the driver's seat for how high potash prices go this year, while Belaruskali will determine how low they go. What does that mean? As of right now, the output from Belarus is a no-go. It's not going to happen. So it all depends on Nutrien, which is a Canadian company, by the way. Prices will move higher. Nutrien will have to supply more output of fertilizer. Now, what does that mean? More revenues or more profits for the company Nutrien. So this is one stock that you want to be in. And as you can see, the impact is already being felt here in the United States as we see New Orleans urea prices shooting higher once again. The dip is being bought, and this will translate for higher food prices that you and I are going to pay for. So how do you play all of this from a stock market perspective? You got to stick with grains and grains-related stocks. The best way you can play it is via buying commodities, but a lot of you are intimidated by trading commodities. So this is the cycle, at least according to me. You have fertilizers, you got to use those. Then you have seeding, then herbicides to maintain your crops, then farming, then processing, and lastly, consuming. When we talk about fertilizers, we have companies, and these are my picks, by the way. You can do your own research and pick whatever names you want to pick. These are my names. We have Mosaic, Nutrien, ICL. In seeding, we have Corteva. Herbicides, we have FMC. Farming, we have AGCO and Deere. Processing, we have Archer Daniels, ADM, and Bunge. Then in consuming, you can buy any company that produces the products that you buy in the grocery store. For example, we have General Mills, or you can buy the grocery store, in this case, Kroger. Now, in my portfolio, I own some of these names. I own Mosaic, Nutrien, Corteva. I have a lot of fertilizers. My portfolio is starting to smell. But anyways, I also have FMC, AGCO, ADM, and Kroger. And by the way, I've been recommending Kroger since the summer of 2022. Do yourself a favor and look at that chart. Kroger remains my largest holding, by the way. Made a video about it, and I called it the safest stock out there. So do your research, look at the balance sheets, look at the income statements, look at the earnings, most importantly, look at the charts and make your own conclusions. I'll give you one example here, and then you apply it on other names. Let's use Mosaic here, the chart of Mosaic from a weekly chart perspective. I've been recommending this name, by the way, since a year ago. And look at how beautiful this chart is. We have a trend line. Obviously, we're having a breakout right now. Insanity. This is what I call a last hurrah rally. It doesn't mean that the rally will end anytime soon, but it means that we're getting overstretched and overextended in the technicals. You could wait in the sidelines, waiting for a dip. Perhaps the chart will go down to retouch the trend line once again, and then you buy it from that point on. It is entirely up to you. You might be intimidated by the technicals and say it is too risky to buy right now because the technicals are overstretched and overbought. I get it. I personally will be hesitant to buy it right now if I wasn't already in it, but we gotta play the devil's advocate. If we zoom out to a monthly chart of Mosaic, look at the last run. And I remember this because back in 07, 08, all of my colleagues wanted to buy oil stocks. Exxon, Chevron, the rest. I came up with the idea that natural gas is surging higher. Why not buy fertilizers? Why not buy Mosaic? Everybody looked at me as I'm crazy. You're too young, bro. What do you know? I added it anyways, and I beat their asses. And this stock was my top performer in 07, 08. So again, the technicals are overextended, but they could get crazy. Who's to say that this run that we're having right now will not match the previous run in 07, 08? Could happen. So it is entirely up to you. Do your own diligence and then decide whether you want to buy or wait in the sideline for a dip to buy. These are the names you want to stick with. We're going to have massive food inflation with no end in sight at all. The Fed is being too timid right now in raising interest rates and tackling this inflation because we have yet another emergency with the Russia-Ukraine crisis. They're not going to let any emergency go to waste, folks. What does that mean? Inflation will continue to move higher. And this time around, inflation is led by food inflation. Another thing, legendary investor Peter Lynch said, when there is a war, you want to buy the bullet stocks. What does that mean? Now, inflation is not really a war, but it kind of is. It is a war on consumers. So you're better off buying closer to the source. So you see this cycle from fertilizers all the way to consuming. You want to be closer to the source, in this case, fertilizers. But all of these names are good picks, and I'm putting my money where my mouth is. I continue to hold on these names. I'm not selling them. I'm not dumping them at all. I'm just buying puts once in a while when the technicals become overextended, or I sell upside calls to raise cash. And all of these option strategies, folks, could enhance your returns in any stock. So use them or you're going to lose them. And lastly, if you bought some onions and they were a little too expensive and maybe tasted a little funny, no, that wasn't inflation. That was actually meth onions, courtesy of San Diego, because the authorities seized nearly $3 million worth of meth in onion shipment. So go ahead and check your onions before you start cooking. Anyways, folks, we're going to move on here and cover the market information for you. We start with the performance of indices today, and here we go. The Dow Industrial Average closed in the green by 596.40 points, or a gain of 1.79%. The Nasdaq also closing higher by 219.56 points, or a gain of 1.62%. The S&P 500 also higher by 80.28 points, or a gain of 1.86%. What about the sector's performance today? They're all in the green, and the gains were led by materials at number 1, capturing the gold medal. Number 2 for the silver, energy. Number 3 for the bronze, industrials. We're not going to shame any sector of the market right now because all of them closed in the green today. What about the advance to decline ratios? NYSE 79% advancing versus 18% declining. The Nasdaq 65% advancing versus 29% declining. Futures, commodities, look at this. Unbelievable. A massive surge in crude prices today with no stop in sight as of right now. We can dance around it. I know the media is in full propaganda mode, and some of it is understandable because we have a war going on, but in reality, these sanctions are going to bite us too. They're going to cripple the Russian economy for sure, but they're going to hurt European economies and the US economy. There is no way around it. And people say, and I agree by the way, the green energy disaster policy has to stop. The lunacy of the so-called green energy has to stop right now. It failed. It is too aggressive. It needs to be gradual. The problem is the increase of supply from the US will not solve the problem. It could, keyword could, dent crude oil prices significantly by 10, 15, 20%. If we have an announcement right now from the Biden White House that says, okay, we're going to issue drill permits all over the place. The problem is, I made a video about it, and that video went viral by the standards of this channel. It got about 250,000 views, and it was an unorthodox approach to explaining inflation and macroeconomics. It doesn't matter what the supply is. I'm sorry to say that, but this is the reality. What we're having right now with this inflation is not just a supply-demand imbalance. Notice that the Pokemon variant is gone, yet crude oil prices were surging higher even before the conflict between Russia and Ukraine. Why? Because inflation is always a monetary phenomenon. If the Fed continues to print cash out of thin air, the system is already flooded with cocaine from the Fed. All of that money, folks, has to chase something under this inflation environment. And the best assets to chase under inflation are commodities, specifically energy commodities. So it doesn't matter what happened. Every dip in oil will be bought right away until and unless the Fed finds its Volcker and starts increasing interest rates significantly higher. This is the only thing, and even Goldman Sachs now agrees with me, this is the only thing that will reduce the inflation in oil prices, tackling the demand. And the only way you can tackle the demand effectively is via monetary tightening. But the Fed right now remains delusional, way behind the curve. As we speak right now, they continue to buy bonds, they continue to buy mortgage-backed securities, fueling this inflation higher and higher and higher. We could see crude at 120, 150 easily. And at some point, the Fed will have to slam their foot in the brakes. Everything will crash. You will see it. Remember what I'm saying right now. Because when, not if, but when, because they will be forced to, when they increase interest rates aggressively higher, you watch. All of this inflation, poof, gone. Crude oil prices will go down dramatically. The problem is, by increasing interest rates abruptly and aggressively, they will cause a recession. Hence, once again, a recession is the cure and the remedy of inflation. This has been always the case. Anyways, the WTI closed the day with gains of almost 8%. Brent closing the day with gains of almost 9%. Gasoline was up over 8% today alone. Heating oil, look at this, gains of almost 13% today alone. Natural gas up 5.5%. We are reaching crisis mode here. What about softs? Lumber surging higher, gaining over 3.5% today. OJ gaining over 4.25% today. Sugar moving higher by over 1.5%. Meanwhile, we have cocoa pretty much in the flat line, while we have declines for both cotton and coffee of over 3.5%. What about metals? Gold and silver were down, perhaps taking a break for a little while. But look at palladium, copper, most importantly palladium, surging higher by almost 4.75%. What about meats? Live cattle and lean hogs futures pretty much in the flat line, while we have massive gains for feeder cattle futures of over 2% today. Lastly, what about grains? The most important commodity in grains right now is wheat. Wheat surged higher, closing the day with gains of over 7.5%. Then we have modest gains for canola, rough rice, and corn, while we have a downside day led by oats, soybeans, soybean meal, and soybean oil. And here's the problem, folks. We've been talking about the sanctions against Russia. They have ripple impact. You're about to see it. You think the market is just going to wallop its way higher? Think again. For example, European natural gas prices more than doubled in a few trading sessions, and now they've reached all-time highs. You think this will not have an impact on European economies? Think again. We're already seeing the impacts. Global stagflation. Europe is facing stagflationary headwinds, with oil and gas prices surging and a less robust economic recovery underway than in the US. Well, Lisa, give it a little bit of time. The economy here in the US will weaken. We will be left with higher and higher and higher inflation. Stagflation is already here. Continuing, with this backdrop, it is concerning that the euro has fallen to the weakest versus the US dollar in almost 2 years, since it only exacerbates this inflation. The UK will be the first to fall, and then Germany, and then the rest of them. And when we talk about this green energy mania with the EVs, this inflation will not stop, folks. Because all of these manufacturers are shifting to EVs. Well, guess what? Aluminum and nickel prices are surging out of whack. A lot of these supplies come from Russia. We have sanctions. Nothing is moving off ports right now. So the prices of EVs will surge significantly higher, and the shortages will now extend for longer and longer and longer. Meanwhile, we have to rely on the used cars inventory, so used cars prices will continue to move higher again. This could be the biggest inflation that we have ever seen, even bigger than the 1970s. Moving on, the big casino, the options market, what's going on here? The hottest table by far is Apple at around 960,000 contracts traded today. About 61% of those were calls. And at number 2, Tesla, the souffle, with around 800,000 contracts exchanging hands today. About 59% of those were calls. At number 3, AMD, with about 550,000 contracts traded today. About 70% of those were calls. What about the unusual activities that took place in the options market today? We start with the ticker IWM for the Russell 2000. They're buying puts here, the 194 puts for the expiration date March 11th, with the expectations that the name could drop down by more than 5% by then. They paid about $1.40 a piece to enter this trade, all in all spending about $3 million. What about the ticker FEZ for the European ETF? They continue to buy puts, in this case the 38 puts, the expiration date, May 20th, with the expectations that the name could drop down by more than 7% by then. They paid about $1.50 a piece to enter this trade, all in all spending about $2 million. What about the trade for the ticker ARKF? This is one of Tesla Witch Cathie Wood ETFs. They're all on a free fall right now, and somebody's betting for more declines to come in the RKF. In this case, they're buying the 25 puts for the expiration date, April 14th, with the expectations that the name could drop down by more than 15% by then. They paid about $1 a piece to enter this trade, all in all spending about $1.2 million. What about the ticker GDX? This is for the gold ETF. This time around, they're buying calls, expecting more upside for gold. In this case, the 41 calls for the expiration date, May 20th, with the expectations that the name could could pop higher by more than 15% by then. They paid about $1 a piece to enter this trade, all in all spending about $1 million. What about the trades for the ticker OXY? This is for Occidental Petroleum. This is a calendar spread, and it is brilliant, by the way, but most importantly, telling to what's going on in the oil market right now. Remember when we talked about the spreads in crude futures, the 2 to 3 months, meaning the expectations are for a massive pop right now, and then we will see a cooling down in prices. So pay attention to this trade, because they bought the 52.5 calls for the expiration date April 14th. Then they sold the 60 calls for the expiration date May 20th. What does that mean? The expectations are that Occidental Petroleum will move significantly higher, maybe above 60, but by the expiration date of May 20th, Occidental Petroleum, and the assumption is oil prices too, in this case for Occidental, will drop down below 60. So what this trade is saying basically is, we will see a transitory pop, a significant one, but it's going to cool down at some point quickly for whatever event. We don't know what it is, but this shoot up higher will cool down at some point. This trader thinks at around May 20th. So they paid about $3 in buying the 52.5 calls for the expiration date April 14th, and they received about $2 a piece from selling the 60 calls for the expiration date May 20th. So the entry cost comes down to $1 a piece. And all in all, they spent about $1 million for this trade. Continuing with interesting trades, what about the ticker QQQ for the NASDAQ? They're buying calls now, interesting. The 366 calls for the expiration date, April 14th, with the expectations that the NASDAQ would pop higher by more than 5.5% by then. They paid about $4.75 a piece to enter this trade. All in all, spending about $2.5 million. And lastly, at the bottom of the table, what about the ticker RSX? This is the Russian ETF. I know everybody wants to play the pop higher when it happened, because it's going to be an epic trade, by the way. The problem is, it is just too risky right now. You have no clue whether they're going to delist the RSX to begin with or not. So pretty please, if you're going to buy calls in this name, or puts for that matter, because the premiums are just getting out of whack, be careful. Take your profits quickly. This trader bought the 8 bucks calls for the expiration date March 18th, with the expectations that the name could pop higher by more than 11% by then. They paid about $1.75 a piece to enter this trade. All in all, spending about $700,000. Moving on to the heat map analysis. What's going on here? We have the Powell pop confirming the 25 basis points, not 50, and hence you're seeing the tide that lifted all boats, everything pretty much lining up green with very few exceptions. One notable mover after hours is Snowflake, and give me the ooh, because Snowflake, last time I checked, was down almost 30% after hours after coming short of expectations in its earnings. What about the defense contractors? They were down today, so is this all there is, or should we buy the dip? The answer is you should buy the dip as an investment. And the reason is, look at the map, these are NATO countries, and so far, a lot of them been freeloading on the United States. These are rich countries. In certain cases, they have a better standard of living than we have here in the US. But somehow we have to solve their problems all the time. We have to clean up their mess all the time. These are rich countries with trillions and trillions of dollars in GDP, and they have powerful defense forces. They can solve the Russian problem on their own, but they gotta rely on the generosity of the US. Well, this is not gonna happen anymore because all of them have to ramp up the spending to at least 2% of GDP or more. And as you can see, all of them are lagging, pretty much. Germany is lagging. Italy is lagging. Spain is lagging. The Czech Republic is lagging. And so many other countries that I cannot name are also lagging. But the good news for these defense contractors is all of these countries will ramp up defense spending. We're talking billions and billions of dollars. Germany alone will spend an excess of $20 billion on armament. The majority of these arms will come from the United States. Lockheed, Northrop, General Dynamics, Raytheon, because we happen to be the biggest supplier of these arms. They have their own suppliers, but again, a huge bulk of that spending will go into buying US arms. So yes, you gotta buy the dip in these defense contractors as an investment, not a trade. Let's zoom in to the auto manufacturers because we have Tesla closing the day in the green. It was actually down in the red while the Nasdaq was trading higher. But we have notable movers here. Let's start with Toyota. Toyota is joining the ranks, now suspending Russian car productions and imports. Toyota was in the green today. Ford is splitting the company into EVs and the combustion engine. This is a little bit of crazy talk. I'm a shareholder of Ford, but this is kind of loco, so I might exit my Ford shares entirely here. Then we have Rivian. Rivian was down big today, and the reason is Rivian is increasing prices by about 20% on their non-existing cars. You know, the cars as an NFT for now. Well, that's going to cost you 20% more. Another one, you don't see it right here, but Renault, French manufacturer, is getting crushed. Why? Because of the exposure to the Russian market. Again, folks, these Russian sanctions are not going to just crush the Russian economy. There are ripple impacts. Europe will get hit the hardest, and then it will hit us too. What about the heat map for the ETFs? It's a sea of green across the board. The inverse indices were down today. The TLT was down. Gold was soft, but pretty much everything was in the green. Look at the action between growth and value. Believe it or not, value outperformed growth today. The VTV, the IWD outperforming the IWF, and the VUG. Now, when we look at international markets, as you can see, they're all in the green, but the outperformer remains the EWZ, the Brazilian ETF. My pick. And today the EWA, the Australian ETF, was also higher, but the consistent performer so far has been the EWZ, the Brazilian ETF. Moving on to charts, and we start with the SPY's chart, a 30-minute chart. What's going on here? An upside day. We're now above 430, the line in the sand. This is the good news for the bulls, and it's not just 430, by the way. The chart recaptured 434, and most importantly, 438 as support. It closed a little below that number, but we're not going to make a big deal out of it. So all in all, the bulls scored massive victories today. Here's the problem. The bears will counter and say, number one, you opened the gap down there, and that gap will be closed. Number two, you're getting overextended again in the RSI, meaning you're going to pull back. Number three, all in all, who's to say that this is not going to be a double top formation? We will see the SPY going down to close the gap and then fail 430 once again. Here's a daily chart for the continuous contract for the SPY, the S&P 500. Again, the chart is going back and forth within a range. The support 4,232, the resistance at 4,384.5. The chart is struggling for now to crack above the resistance, turning it into support. But the bulls are not through yet. We cannot say that the bulls are done. Who's to say that this chart is not going to pop higher again and recaptures 4,384.5 as support? It is absolutely possible. Look at the momentum indicators. They're all curling higher. The volume is receding. This is a good sign for the bulls. The problem is, the bears will counter once again and say, what if this is a bear flag formation to begin with, all in all, and sooner or later it's going to flush down? The problem is, the moment the bulls crack above 4,384.5 and recapture that level of support, the bear flag goes out of the window. Another point, it is just too early to say whether this is a bear flag or not. The bears should be on the sidelines for now. The bears should not start shorting this chart if they want to do it in a safe way until and unless the support of 4,232 is broken for good. For good means a daily closing below that number. Then we will see another flush down. So for now, all what you have to do is ride the ride higher until and unless we get a reversal signal and a confirmation. This confirmation will be once again losing the support of 4,232. What about the Qs? 30 minutes chart. Once again, the bulls scored some points here, moving higher and away from 343. The problem is they did not recapture another level of support to secure 343 as support. For example, 352 remains as resistance for now. So who's to say that at any moment right now, this chart could flush down again and it fails 343 as support? This is at least what the bears are going to argue for now. The bears will also argue, look at the RSI, you're getting overextended again. There is no conviction in the buying that we saw today. At any moment, this chart could break down. The problem is for the bears, at least for now, you cannot short just because the chart broke 343 as support from an intraday perspective, and even daily perspective. You're only going to short, at least in a large amount, if the support of 334 is lost for good, meaning a daily close below that number. Here's a daily chart for the continuous contract for the Nasdaq. Once again, the good news for the bulls, the chart is still trading above 14,000. It remains support. The momentum indicators are curling higher. The volume is stabilizing. All of these are good signs for the bulls. Now the bears are going to counter and say, it doesn't matter what the bulls do. Sooner or later, we're going to meet them at around 14,445, or we're going to slaughter the bulls. Why? Because we have a descending line of resistance, a sloping line of resistance, which coincides at around 14,445. So sooner or later, the bulls will face the resistance. What about the IWM? 30 minutes chart for the small caps, Russell 2000. It gapped higher. It is for now stabilizing at around 204.5 between support and resistance for now. The problem is, once again, the RSI is getting overextended fast, meaning in all likelihood, it's going to be a tough job for the bulls to secure 204.5 as support. What about the Dixie? What's going on here? We have a topping candle for now, a shooting star. Whether that's going to play or not, it depends. But two factors hit the dollar today. Not among them the ruble, but number one was the dovish take from Jerome Powell. And perhaps this is the most important part. The other factor is we have other currencies that are firming. So could it be that the dollar is about to get soft right now and it might lose the support of 97 for good? This is entirely possible because you got to remember this, sooner or later, this chart will be overbought, overextended from a technical perspective. It's going to pull down. This will be another tailwind for gold to continue to move higher. But remember this, even gold is getting a little overextended. Doesn't mean it has to go down right now, but it means at least it has to consolidate for a little while before it pops higher again. And any drop in the dollar will be a cherry on top for gold. What about the 10-year yield? What's going on here? Daily chart. This is an important chart, so pay attention now. Why did the 10-year yield pop higher today? Did it pop higher because of inflation expectations moving higher? Not really, because if that was the case, the Nasdaq and the high multiple names should have been down. Is the 10-year yield moving higher based on growth expectations? We did not get any data, at least today, pointing out that we're having more growth in this economy. If anything, growth is stalling. So why did the 10-year yield pop higher today? Number one, of course, the Jerome Powell factor, saying it's going to be 25, not 50. So why would that pop the 10-year higher? It should have pushed it down. The answer is because he's kicking the can down the road in terms of hitting growth in this economy. So yes, growth is a factor behind the 10-year yield popping today. But the most important factor was the talks that are going on right now between Russia and Ukraine, and perhaps an upcoming ceasefire, because the recent behavior of this chart is every time we saw escalation in the war, the 10-year yield dropped significantly to the downside. Well, today it popped higher, and we have the news about perhaps an upcoming ceasefire, at least in the working. I believe that this was the reason, at least for now, for the 10-year yield popping higher, because those who panicked and bought bonds, they're now dumping these bonds for a quick profit, and therefore the 10-year yield popped higher. Here's the TLT weekly chart. Look at this. It dropped down again. It failed to crack above 140. This is an ominous signal for the TLT that perhaps it will continue to go down. It is not the final crack or attempt at 140. Perhaps in a few weeks, the TLT could try again. But if the support of 134.5 is lost, then say goodbye to 140. And that will come hand in hand with the 10-year yield popping above 2% once again. What about the VIX 4 hours chart? What's going on here? The MACD is still yo-yoing back and forth between producing green impressions and red impressions on the histogram. It has yet to make a decision, and therefore we say that the risk of pies is significantly high. For example, if you bought the stock market today, who's to say you're not going to eat a pie in the face right away in the morning tomorrow? And the reason is the VIX is still trading above 20. It is still going back and forth at around 33. You don't have a decisive failure at around 33 yet. Likewise, if you are a bear and you're shorting the market right now, who's to say that this is not a reverse ABC pattern? And soon enough, we will see the VIX going down all the way to 20, and the market will continue to rally from this point on. What about the VXN, the VIX for the Nasdaq? No decisive movement whatsoever, at least for now. Look at the MACD. It's going back and forth between red and green impressions. The chart is still making higher lows. It perhaps made a lower high for now. You're not going to confirm that without a lower low. So you gotta wait till you see a lower low, and then you have a confirmation the VXN is weakening, the Nasdaq is firming, and it is the right decision to buy the Qs. What about Apple, the daily chart? Today gave it another shot at the upper end of the channel in yellow, as you can see, and it failed to crack above that line. But it is not a rejection yet. Matter of fact, the momentum indicators are firming, which suggests, at least for now, that Apple has what it takes to crack above the line and perhaps retest 172.4 as resistance. You're not going to say it is over until you have a reversal signal, until you have a rejection from the trend line in yellow. For now, we don't have that yet. What about Tesla, the souffle in hourly chart? We had a mini baby bear flag that played out in the morning today. Tesla was in the red while the Qs were trading in the green. But what do you know, midday we saw a reversal once again and Tesla traded higher. The problem is it remains within a range. There is nothing you can see here, nothing you can trade whatsoever. Matter of fact, it is starting to get a little overbought once again on the RSI. And remember this, Tesla whale will get frustrated. Tomorrow it's going to be Thursday, so if this chart doesn't move higher by tomorrow, he's going to dump. He has his options, the 900 calls, with an expiration date of Friday. So it better happen sooner than later, or Tesla whale will lose money. And by the way, we have some news with Tesla once again. Elon Musk is not happy because Biden gave him another one. He did not mention Tesla at all in the State of the Union, and Elon Musk really hates that. It really gets under his skin. I believe Biden is enjoying all of that. What about tulips, BTC? What's going on here? Well, if we have peace talks and the ruble starts to recover, this chart will go down. It will lose the support of 42,000. For now, the bulls made a decisive comeback. We shouldn't say the bulls, it's actually the Russians. But anyways, for now, you have the risk of the triple top. Until and unless this chart breaks above the previous double top, you're not out of the woods yet. And by the way, Janet Yellen came out today and said she will crack down against crypto because the Russians are using it as a workaround sanctions. So now Janet Yellen is coming after your tulips because this inflation might hurt the Russians with the crypto.
Those we have to take it down.
Anyways, the last chart for AMC, what's going on here for the apes? The little baby bear flag played out today. AMC was down, but it managed to reverse and close the day in the green. Now the apes would argue, what if this is a bull flag formation? Sooner or later, it's already playing out. Sooner or later, we're gonna reach 21, retest that as resistance once again, or we're gonna climb above it like a bunch of monkeys and turn it into support. Lastly, moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have initial jobless claims. We also have the services PMI and the ISM services index. We also have factory orders. And of course, the testimony by Criminal Powell continues. And lastly, we have the King of Doves, New York Fed President Williams. So for now, the economic calendar favors the bulls. You have the King of Doves, you have Powell speaking. What more can you ask for? Anyhow, folks, this is all I got for you for now. Thank you for listening. Thank you for watching. I will talk to you again tomorrow.